Hey guys, today's October 31st. Happy Halloween, and let's get to some silver and gold. So, as you can see here, the price overnight dropped 3.6%. That's about 80 cents for silver. We're now currently below $22, and it looks like the decision to continue quantitative easing has had a much more negative effect than a lot of people were expecting it to have on the metals. So, the video I put out yesterday, I told you guys I'm now going to be sitting tight and waiting for the 1850 to come back in play because I think that sort of a comment down here puts my thoughts perfectly. Damned if you do, damned if you don't. So it looks like they decided not to taper. They're going to continue quantitative easing, and the prices got crushed. However, in my last video, I posed the question, if they did taper QE, would that have resulted in a rise in the metals? And I think the only logical answer is that it would not have. It would have created a much, much bigger negative effect on the metals. So this video is just going to be some more thoughts on the coming year, some more thoughts on where the prices will go in 2014. And I'm just going to bring up two scenarios that I guess, if it depends which one actually comes to be true, that will decide where the prices will go. So the first scenario is the realization that QE is here to stay. So if the market realizes that QE is something that is not going away, all this taper talk is just exactly what I said, just talk, right? It's not going to be a reality. It's not going to actually come to fruition. So if the market does realize that QE is never going away and it is something to stay, then I think that will have some positive effects on the metals. However, the second realization in the market during 2014 could be that gold and silver have proven not to be a safe haven asset in the past, and anybody who has bought it since 2008 2009 because of its safe haven asset capabilities are going to be completely disappointed, and any pops in price we get, we're just going to be seeing a whole bunch of selling action because everybody has lost faith in the fact that it is a safe haven asset. So if you look from here, any time between 2010 to 2013, anyone who has bought in that time frame is currently underwater. That's if you're just buying generic bullion and not semi-numismatic coins, which are still selling for $40 on places such as eBay and other third-party distributors. But anyone who has bought in the past, so since 2010, is underwater. So these people, if they're looking to get their money out of silver, anytime we see a pop back up, like let's say $26, anybody who has bought here on the dip who is looking to take their money and run from this market is just going to sell, and that's going to create an immense amount of selling pressure, and we're just going to be continuously fighting all this resistance that we've established over the past 3 years. Now, remember, this is under the assumption that gold and silver are not a safe haven asset. I mean, if you just look at face value, what has happened over the past 3 years, you can pretty easily come to the conclusion that it has not helped fight inflation and it has not been a safe haven asset. So I'm honestly just being real here. saying the actual perception of a majority of people who are relatively uneducated in this market, and they don't sort of understand the fundamental reasons behind why the prices have come down. Now, so those are the two scenarios. I'd like you guys to go ahead and speculate on those two scenarios in the comment section below. So the first scenario, which is the market coming to the realization that QE is here to stay. All this taper talk is just mumbo jumbo, and that should have a positive effect on the metals, because then all this speculation about, oh, tapering in, September, tapering in October, tapering in December, and then the next Fed meeting after that, I believe, is tapering in March. So once all of this happens, and once they do not taper anything, I think the realizations should start coming in that there will not be any tapering. So that's scenario one, that would be good. Scenario two, as I said before, is the other realization that gold and silver are not safe havens. Anybody who has bought in the past 3 years is just going to be looking to sell out and run away from this market as soon as possible. So that's scenario two, kind of like a bullish scenario and a bearish scenario.